Welcome to episode 12 of the Crowdcreate Mastermind. These are the experts in the renewable energy field, and they're here to share with you the tips and insight they're seeing. The purpose of these Crowdcreate Masterminds is actually to connect you to these thought leaders, hear directly from them what they're working on, what they're excited about, and what's in the future for renewable energy. It's a hotly debated topic, from EV SPACs to what's the downside with this recent renewable energy push. You heard it all here on the Crowdcreate Mastermind.
Hi, everyone. I'm Charles Jurczynski. As Ivan said, I'm at Generate Capital. I work on the, we call it our project delivery team. So that's kind of development and construction of assets. And so my day-to-day job is largely kind of a development manager, project manager of assets under construction. To give you some context, Generate is an investor in infrastructure. So we are always looking for new assets to onboard at all stages. And I guess moving on to that next step, what am I most excited about? Well, a lot of it's digitization and really creating the platform that allows more efficient onboarding of assets, more efficient development and construction management processes, and reporting on all of these too. I think there's a huge opportunity to streamline these processes. Is there anything that I can ask the community about? I would say if you're interested in joining, always ping me. We're growing fast, so looking for more people. And I just love hearing kind of people's perspectives and experiences on how they've approached project development and field work. Really, the more assets, the better. And Generate is, of course, always open to investing in platforms as well. And I want to specify project finance as opposed to carbon tech, although we're starting to get a little bit more involved in equity checks in corporates as well.
No, thanks, Charles. What's a recent project that you guys have been involved on?
Well, a lot of my time's taken up with community solar in the Northeast generally. There is a pretty big and growing market there, and Generate's been involved in that quite a bit in the past 3 years or so. So that's a big space. Energy efficiency as well, all over the country is also big and growing. And then we have a big waste to energy portfolio too. So there's a lot of different technology. I think that a lot of different markets that are starting to kind of mature in a way that's very exciting.
Awesome, thanks, Charles. And also in the chat section, we're going to be putting bios in and links to everybody's website, so everybody can kind of see what everybody's working on and follow along. And feel free to post any questions and interact with the other panelists for the mastermind.
Yeah, thanks, Charles. Anybody have any feedback for Charles? Any questions?
Hey, Charles, what's your all's take on the green hydrogen hype? At some point a reality, but for now, any bets there?
Yeah, I mean, obviously our president Jigar Shah has a lot of opinions on this and has really been a thought leader. I think it's important to sort of pick under the surface. You've obviously got generation, transportation, storage, and end use cases. And I think we're pretty strong on, well, I mean, Generate has an investment in Plug Power, so we're very bullish on kind of hydrogen-powered forklifts. But generally speaking, I think there's a bit of an open discussion on whether there's more value in locating generation close to the end use and minimizing your transportation costs, or identifying locations that are low cost to produce hydrogen, but you may incur additional transportation costs. I think people are sort of working that through, and where you play in that value stack is also important. But right now it's very opportunistic, and there are a couple of business models that we're exploring.
Cool, thanks.
Thanks, Charles. So actually next, I'd love to go to Scott. So Scott, I know you're involved on the platform side too, and also, you know, what Charles was talking about on the solar and EV. I know your firm has been sharing some interesting stats, you know, the decrease in the cost of solar from 2010. So yeah, I'd love to hear from you.
Sorry, that cut out there for a moment. From me, was that?
Yeah, I wanted to hear from you.
Yeah,
what are you working on? What are you excited about?
So yeah, I'm Scott Gillam. I'm the CEO co-founder at PF Nexus. Broadly, we're a platform which is helping to unite the capital partners with projects globally in primarily renewable energy projects. We also deal with sustainable infrastructure. But of course, it's quite an exciting time for all of us involved in this industry at the moment. And, you know, with what's gone on in the pandemic in the last year, there's been a kind of a refocus on technologies which help to allow partners to potentially meet using online technologies. So it's been quite a good year for us. We're really starting to kind of blossom in terms of our user base. In terms of what am I most excited about? Well, there's you know, we're really in the crosshairs of what is a convergence of several big global trends. Solar in particular and renewables has got much cheaper in recent years. Efficiency seems to be going up at the same time as those prices going down. And also at the same time, you've got kind of capital movements happening, which is really quite an unprecedented sort of time for us. You've got yields going down and being incredibly low in the Western world, which has led to a lack of assets for the capital to go towards. And yet in emerging markets, you have still relatively high yields. The comparative technologies for generating energy in a lot of these markets are often still oil. And so the opportunities are still there for high returns. We're essentially matchmaking the two, focusing primarily on capital from advanced markets and projects in emerging markets and high growth markets. So yeah, we're really in the crosshair. In terms of, is there anything the community could help your project with? Well, of course, we're always keen to have more eyes on what we're doing and sort of spread the word of what we're about. So I would like to think that a lot of people in this room at the moment could benefit from what we're doing at the moment. We have a solution which is free to register for. And I think it's pretty awesome what we're doing, if I may say so myself. And we try to structure our fees so that it is really the least painful approach possible. We're automating as much of this as we possibly can and really making the market a much more efficient place for everybody involved.
Thanks,
Scott.
Scott.
What are some of your most exciting projects right now that you're working on?
So in terms of actual physical projects, it's been quite surprising since we launched this. We were originally expecting to be focused on kind of the small and mid-market, but in actual fact, we've had a lot of interest at the upper end of the market. We're currently hosting one of the largest projects in the US. We have already closed one of the largest projects in Latin America. And we also have two of the largest projects in Europe on the platform at the moment. So yeah, it's quite exciting to be involved in that kind of thing.
All right. Scott, I know it's a hot topic, but do you have any exposure to the SPACs that are for a lot of the clean energy projects?
No, we don't, not currently, but keeping my eyes peeled.
Very interesting.
Scott, you talked about opportunistic. What type of yields are you seeing to attract capital to these projects?
I mean, it really depends a lot, depending on the jurisdiction that you're looking at, and really, I guess what the opportunity cost of investing would be. So, in some markets where it's entirely new capacity being added, and where their main kind of subliminal comparative is really doing kind of heavy fuel-based power, yields can still be north of 20%. And we are seeing that in some markets. In other markets where things are starting to become a bit more uniform and commoditized, mid-teens is relatively common. And we deal a little bit less in the markets where numbers are kind of towards the lower end of single digits.
Okay. Thank you.
So Scott, I haven't checked you guys out, although I'm eager to do so. But just in summary, you're a marketplace, right? That's kind of matching developers of renewable energy projects over in emerging markets with investors mostly in Europe and the EU. And as a platform, you will have a percentage of transactions which complete. Is that right?
Pretty much, yeah. I don't tend to call us a marketplace, but we're quite similar to. We focus currently primarily on the kind of surface level of the introduction. We don't delve into the advisory or too much into the actual sort of structuring of the deal and the handling of payments. But yeah, we're quite surface level at the moment. Our plans, of course, are to ingrain ourselves a bit deeper in the transaction, but we'll see how that goes.
Yeah, Scott, how much would you say, rough cut, do you spend time on sourcing new projects versus sourcing new capital partners? Where's the pain point for you?
Good question. So I think as a platform, and in particular as a two-sided platform, when you're starting this kind of a thing, you have to focus more on one side than the other. You have to decide which is your chicken, which is your egg. For us, we focused originally on attracting projects and then used those projects to attract in the capital partners. And so as a result, over time, it's kind of changed the proportion of time spent on each. It's approaching 50-50, which is hopefully where it will end up. But there do seem to be more of the kind of small developers in the market than there are, capital partners who can potentially write the big checks, etc.
Yeah, good feedback. Brian, you have a question.
Small to, size-wise, minimum, maximum that are on your platform? You just use the word small, but it's relative to depending on who you speak to.
Absolutely. So we it is quite a broad range, and it is skewed quite considerably. I think the last time that we sort of ran the metrics, our straight average of projects on the site was circa 300 million in capital demand for a single ticket. But if you took the median, it was actually closer to 50 million, which kind of really shows the skew. But in general, we are finding that our sweet spot seems to be between 50 and 80, seems to be a comfortable place. Once you start getting more north of that, you potentially need more than one capital partner in there, and things start to get quite complex and a bit slower moving, of course.
Well, one follow-up. You said emerging markets, heavily weighted, any particular area like Africa or Asia, or Latin America, or?
So Latin America for us is a really good market, and it's something which we would like to have more projects from kind of around that region. We also have a decent number of deals in certain parts of Asia, and of course throughout Africa. And Eastern Europe as well is a very good market. Some parts of Asia are kind of self-serving, and so we don't really deal with India or China. Right. But other parts are really quite underserved markets in the current way of doing things.
Wow, thanks, Scott. Thanks for those insights. Brian, I know you've been asking a lot of questions, but I'd love to hear from you. You also see a lot of on the data side, and I know you guys publish a lot of newsletters in that regard.
So we co-founded Ardour Capital in 2002. So we've been at this for almost 20 years. So we're an overnight success, 20 years in the making. And we built a traditional sell-side business. We published a lot of research. We ran about a dozen conferences. We created a family of indexes, pure play alternative energy indexes. And off the back of that, we did a lot of investment banking for companies that are now coming to the forefront. We used to cover, we covered Plug Power, Fuel Cell, Ballard, all those companies. And in 2007, on a trip to China, I met a fuel cell company by the name of Horizon Fuel Cell. And recently we raised $20 million for a spinoff of Horizon that is commercializing the fuel cell technology in the Class 8 trucking business. So Charles, you asked about Nicola earlier. So it's a public company. I'm just getting to know you gentlemen. I prefer to keep some of the comments, pretty clean and straightforward. But suffice it to say, and I'm not the expert, so I don't want to speak from my own technical expertise, but I think we know quite a bit about fuel cells. We've known Horizon since 2007, and obviously covered with research and did some banking for some of the other companies. So Horizon has spun off Hyzon, which is a US company with operations in Europe and in Asia as well, Australia, South Korea, and so forth, customers all around. Singapore-based is the parent. So my introduction also includes what we're really excited about working on. So when I said at the top, when we were just introducing ourselves, that the business, the industry is really here now. So Hyzon, and I can't speak to Nicola's order books, but Hyzon has trucks on the road. They've got product, and they're in the process of building out assembly. So you'll hear much more about it. They have a joint venture on the ground in Europe with a Dutch company by the name of Holthausen, which is a traditional, upfitter in addition to a bunch of other fuel-based businesses that they were involved in. But sort of the next step for Hyzon is just like you have in the electric vehicle business, which we were involved in with a number of companies. You have, if you have the cars, you got to have the charging stations. So, if you have the fuel cell, you got to have the people that are willing to start to buy these things. And these are the companies that have huge fleets of trucks. Those fleets, eventually have to turn over. So a company that might have 1,000 trucks are starting to test these things out with orders of 5s and 10s that are moving up. In addition, Hyzon is now moving into the, the infrastructure part of it, as are a number of other players. So Chris, to your point about infrastructure and green hydrogen and all, these are all projects. When I say projects, some of them will be equity investments and some of them will be project oriented in terms of financing. But these are all initiatives, let's say, that are starting to occur as we speak. And we're sort of in the mix on a few of these things, not only with Hyzon Horizon, but a few other players in the field. So it's a pretty exciting thing. Like I've said a couple of times, it's an overnight sensation, 20 years in the making. I had the pleasure when we started the firm of actually meeting Jeff Ballard, who many people say is the the father of the modern fuel cell. Wow. And we suggested he had a company called General Hydrogen, which was basically the idea to make a form-fit replacement of a fuel cell for lead acid batteries and lift trucks. We suggested to Plug Power that they enter that business. But in any event, so it's finally some exciting times. And I think most of you have seen the news that Total, the big oil company, is making significant investments, and they've made everything from a $2.5 billion investment in an Indian solar player to a $2 million investment in Hyzon. So they're really making the change. Exxon announced a $3 billion creation of a carbon, zero carbon business today. At the same time that they announced $20 billion in losses.
Wow.
So things are changing.
Brian, those are some good insights. Actually, just to catch everyone, so Hyzon Motors, which Brian was talking about, hydrogen fuel cell trucks. It's a company. Look them up. It's really interesting what they're working on, and I'm even seeing it, across the board, even on GM announcing, they're going to go full electric. So, how can the community help you, Brian?
Well, all I say to people is we're in the business of making friends. So. There are a lot of things that the other guys are talking about I'm interested in. Charles, we know Jigger Shaw pretty well. You can ask Jigger about us. He spoke at one of our conferences a few years ago. We're big supporter of what he's done, in the past and what he's working on. So very interested, Scott, with regards to a marketplace for projects. It's all good stuff. And it's finally, it's no longer a crazy science project, which, when we first went out there to market our research, there was 4 or 5 accounts on the planet that were interested, and they were all in Europe. And, we understood that the Europeans were way ahead of us, going back to when we started the firm, in terms of, realizing the need for, these types of technologies to turn into businesses. So and I would actually include the Canadians in that, Charles. You're Canadian. Canada has been a little bit ahead of the curve in that. In Toronto, the schools that are up there have supported some companies and some initiatives that we know, that we're familiar with, and we could talk about that offline if you want, or whatever. But
Let's
anyway,
chat more. That's great.
Yeah. Hey, so we're actually getting questions in the Q&A. So all the panelists, feel free to respond. You can just open up the window and you can respond to them. But the question is, why is South America prime for this type of market? Which part in South America? So feel free to answer there. Thank you, Brian. I'd love to go to Chris. So Chris, earlier we were even talking a little bit about SPACs, but interested to see your thoughts at IronOak Energy Capital.
Yeah, sure. Hey guys, excited to learn more about what everyone's doing offline here. So my background is in private equity, really, but private equity by, mistake or by chance. I was getting my master's degree in environmental science and management, needed a client for my thesis. Lo and behold, I ended up having a $2 billion PE fund with an environmental thesis in real estate be the client, and the rest is history, where I thought, wait a second, you can move this kind of capital and do good things in the world. The answer was yes. I thought, holy shit. Science and policy, I love you, but I think finance and startups are more interesting. So I've got this niche banking practice called IronOak Energy Capital, lower middle market, some corporate climate tech stuff, some renewable energy projects across the U.S. It's really less of a focus for me today. I do still keep kind of a deal or two active. I like to say I kind of brainwashed the next generation of middle managers through my faculty work at Duke and UNC. So MBA programs, Masters of Environmental Management programs and the like. But the cool thing I'm most excited about is a new CEO roundtable program I've launched called Entrepreneurs for Impact. So think about YPO or WPO or Vistage, except that all the members are climate CEOs, usually growth stage-ish companies. So they've raised 10 million plus, sometimes $100 million, or if they're in project finance, they're building $100, $200 million worth of projects across the country. So we have monthly meetings, workshops, summits, and the like. But basically, the idea is, look, if you're the smartest person in the room, you're in the wrong room. If you feel like it's lonely at the top, then shame on you, because there are these highly vetted cohort programs out there, like what we do, where we talk to dozens or hundreds of CEOs or entrepreneurs in the space, and we pick 15, and those 15 are badasses, and you want to spend more time with them. So that's Entrepreneurs for Impact. I also produce a weekly newsletter on climate finance and startups called Zero. And then I interview climate CEOs of growth stage startups through a series called Torch. That's almost weekly. I think I'm most excited about looking at things like the project drawdown list of the top 100 climate solutions, and thinking, look, solar and wind, now maybe batteries, like they're mature, great, but boy, there's, pick a number, right? 90 other solutions there, many of which deserve big dollops of capital from Generate or through, Scott's work or Brian's work. And so, how can we, or when will we, right, help those non-financeable climate solutions be financeable? That's what gets me excited. And look, you can watch trends in climate tech being a high growth sector, far faster growth, I think 5x than VC overall. You can look at these fun letters that our boy Larry at BlackRock writes to scare and motivate CEOs of big companies to step it up on disclosure, or else you get voted off the board. ... So that's just things you couldn't have imagined, or I couldn't have imagined 5 years ago. kind of pushing a wet noodle up a hill, as it felt like. I think, as far as what the community might offer for help, I am always looking for, look, CEOs of growth stage startups, and that's all sorts of sectors, right? Green building to forestry to carbon, energy, transportation, et cetera, who are also good human beings, right? Giving and kind and all the rest, who know they don't know everything, and would be a good fit to join these cohorts, these CEO roundtables through Entrepreneurs for Impact. So that's my story, Ivan.
Thanks for sharing, Chris. And I know you and Charles were talking about SPACs just before. Any quick thoughts on that?
Well, I mean, most of the SPAC activity has been in the EV or AV space, and I think there's motivation for investors to repeat what's happened with Tesla, the Tesla effect. And I think we're all excited that Tesla's stock is rising like it is. It's the top, 5 most valuable company in the US. I really hope it's enduring. Hard to justify $200 billion of value creation in 3 months. So I think these SPACs are trying to ride that wave. I think Brian mentioned earlier, these are real companies. I think they have raised $100, $500, $700 million before they're going to these billion-dollar mergers. I haven't tracked, although this will be a great exercise, maybe Brian's done it. I haven't tracked where all the stock prices have gone since kind of opening day. I know, Nicola, hopefully is the exception. I do worry, as we discussed before hitting record, I do worry a little bit that, SPAC is equivalent today to, ICO's initial coin offerings of 3 years ago, or YieldCo's version 1, maybe 10 years ago, where the structures just weren't right or true to the underlying economics. Luckily, YieldCos have come back, and they're the real deal, and tons of capital is there and should be there. I'm thrilled there's this new, mostly trusted way for venture and PE investors to get liquid through a SPAC versus IPO. But I do worry there's a little too much helium in these balloons of SPAC announcements.
Yeah, I look at it. I'm like, WeWork's announced they're going to use a SPAC. I'm like, a company that size, why didn't they just do an IPO? So that just means there's a little bit of maybe a little lack of transparency in some of these going outside of our space that we're talking about here today.
Yeah,
I think whenever I see something get very popular in the financial markets, tends to be a buyer beware situation in my mind. Lots of great companies, lots of great ideas, but I think when there's so much of it, you have to be really mindful of the direction of the markets. Mr. Market tends to correct on a regular basis.
Totally agree. The one comment I would have is that the truth of the human condition is that there will always be bubbles. So whatever the financing tool or method is, this at some point, I don't like to use the phrase will end badly, because I don't think it'll end. What I think it'll be is some of these will pop. And I don't mean in a good way. I mean, some of them will be inappropriately financed, and people will get hurt, and there'll be a lot of lawsuits, and it'll start to rationalize. But that's whether they're ICOs or internet companies or, all of them, master limited partnerships, so I fear the SPAC craze now, because nobody likes to suffer through it. But, I think the inevitable will happen at some point. There'll be just too much money chasing too much quality, and then we all know how that works.
I just want to jump in there, Brian, because I think there's the devil's in the detail, really. It's you look at like the YieldCo phase, right, in renewable energy, and you compare US YieldCos, which promise both growth and yield at the same time, and then you look at the listed funds in particularly the UK, but Europe generally, which said, look, we raise the capital and then we're just a yield play. Right, and we're going to raise new capital to acquire new projects. So it was spun in a slightly different way, and those were structured in a slightly different way, which allowed them to be a little bit more resistant to the promise, right? And I think we haven't really got under the hood of SPACs yet because it's so new and it's so frothy right now that I think things are happening. But I think when you get in, there'll be certain structures that do work and there'll be certain structures that don't work. And I'll be really curious to see how that evolves.
Kind of curious. So Ivan and I, we were in the heyday of the ICO craze in 2018, and there was 1,000+ ICOs at the time, but there was an outlier of 1% that we think is going to return the entire market, maybe even 10 times over, and like similar to the .com crash where Google emerged. I mean, having so much experience on this panel, like what projects do you see that have sound fundamentals, great leadership team, great traction, great project that you think will emerge out of the froth?
Well, just to be devil's advocate, while it may be true that 1% of all ICOs return the market for ICO investments, for an investor in an ICO, who cares, right? They're getting zero. That isn't like a portfolio. Usually a portfolio, and it's not a fund, so that's just a bad day for 99% of investors potentially. Anyway, I'll pause there. Your other question is very hard to answer, and as a securities person, I'm thinking, should I answer that? Anyway, I'll pass the baton to someone else.
I think on the SPAC side, there's tons of speculation versus reality. There's how much market value in SPACs has been created in the EV market alone and the energy storage market in the last 6 months, where a lot of those companies really don't have the infrastructure, but they're valued at $1 billion. I was talking to a group yesterday that was talking about 15,000 purchase vehicle orders for fleets. And that company's not even manufacturing vehicles at this point in time. And I don't even know if they really have a working prototype. The reality is they can probably scale and they can probably get there. But once all these companies start scaling, now we're talking about supply chain issues in lithium and some of the other, infrastructure that's required, not to mention just being able to plug all those vehicles in at once to be able to provide energy to them. So there's a lot of different variables, I think, with the SPACs that are putting a lot of capital in the market where we're not going to see super solid returns across the board. And there's a lot of unknown technologies, I think, that people are banking on that are not quite there yet.
Well, you have the state of California telling you that, we're going to go no internal combustion engines, yet we have rolling brownouts already. So, like, what's the solution to that? So yeah. let's have more people plug something in when the people who already need to can't. So yeah, there's a broader problem here.
Yeah, so. And I'm working in sectors where that combustion is required in certain projects that we're utilizing, and there's no way to scale some of the energy production without it.
Yeah.
That's a good transition, Bill, to you and what you're working on, because yeah, it's a sustainable form, but a different medium.
Yeah, I'm on the other side of most everybody here because I'm a chairman of a company called Vertimass, and we have a technology for converting ethanol into sustainable fuels. We actually take ethanol, and I know everybody on this panel would be aware, but there's a blend wall issue with kind of a 90-10 blend formula, and we're past that point today, which makes the marginal value of ethanol pretty today pretty much useless. You've got a lot of plants idled, but our technology will actually, through a catalytic process, convert ethanol to end fuels, to gasoline, diesel, jet, as well as BTXs. We can make a sustainable propane. We're actually in a licensing discussion right now, exchanging documents, I'm excited to say, to move into an area that candidly I hadn't even thought about, and looked at the U.S. market for propane, and it's 9 billion gallons, and I'm like, well, that's not a small marketplace, even though it's one I completely ignored until somebody actually called upon me. So we're excited to be involved in that. We're actually just got a grant from the DOE to prove up our aviation fuel concept and take that through and follow a new ASTM process to do a blend stock, and we can do probably an 80-20 blend stock of our fuel into aviation fuel initially. We think it'll go much broader than that, but it's a starting point. And there's a lot of conversation about aviation. I mean, I think the fuel cells and electric, all of that can be part of the solution for land transportation, but little of that's going to translate into aviation today in the near term. It seems like batteries are a long way from having kind of the weight to energy balance to shift into aviation. So we're excited about that vast energy market, and we've got a pretty interesting concept to license this and roll it out through the thousands of ethanol plants around the world. So it's kind of an exciting place for us, and certainly the world has gotten better in the last couple of weeks about it. The administration change has definitely made a shift in our narrative. So we're excited to be here today.
What type of biomasses do you guys convert?
We can convert anything. In fact, we can convert not just ethanol. It's actually, the process actually works in all alcohols. So we can take corn or sugarcane or cellulosic ethanol, but we're also in discussion with several groups who are doing carbon capture and taking that carbon capture to methanol and be able to convert that methanol. So it's kind of an exciting opportunity. And I saw one of the people commenting on it. I'm sure they've got a different opinion on aviation, but I haven't seen an airplane fly long distance with batteries. I've seen them short range, and we'll see how it goes. So
we should talk more afterwards. One of my partners in another venture is one of the largest ag byproduct companies in the world. They do all types of ag byproduct, converting them to monetizing streams in them.
Yeah, I think we could have a good conversation. This is a pretty inexpensive bolt-on to an existing facility with a very quick payback for the end user. So we think it's time for we're finalizing our prove up of concept and making it work. So thanks.
Bill, to what scale have you been able to at least test some aviation fuels?
So right now we're in lab scale, but because it's a catalytic process, it can scale up very efficiently, can scale up 1 million times to go to commercial. We're actually doing the scale up testing in partnership with Technip FMC, who's a world-renowned expert in catalytic technologies, and they've done these large scale scale up. So we think we're in a great spot for that today.
I'd love to hear more when you get it. I'd love to hear more if we could follow up.
Great, love to do so, Ryan.
Yep.
Awesome, Bill. Those are some really good insights, and I know that's almost from the other side, from the solar side. I just invited John Hilgers, who's from ClearSkies, and he's a gentleman that actually responded. I wanted to hear, because he's actually from the aviation side. I'm really curious to see where this conversation will go. So John, go ahead, introduce yourself, and we know each other.
Yes, hi. John Hilgers, co-founder of ClearSkies. What we do is we put in renewable energy microgrids at airports and electric aircraft integration. So yes, I was the one who disagrees with the guy who's making biofuels for to be combined with avgas. I agree with you. The hybrid solution is probably in the short term is the way to go. However, yeah, you're not going long distances, but the challenge is 40% of all aircraft flights are short distance. Batteries do take care of that. We have a 250 nautical mile range by the end of 2022. And if you want to not take my word for it, take Elon's. He did a conversation on electric aircraft about 4 weeks ago, maybe 5 weeks ago. But the point is, half of all flights are less than 500 miles. Batteries will get you by the time FAA certification happens the fall of 2022. You have lots of people out there doing it, and all we do is provide the infrastructure. So
Yeah.
we provide the charging. We have partners that do the batteries. We have airlines. We have manufacturers. I have the whole ecosystem.
Well, I'll challenge that you also have airlines that have an enormous installed base in equipment, and they're not going to walk away from that equipment. So in the near term, and near term is you're talking about aircraft that have lives of, 30, 40, 50 years. They're not going to shelve those overnight. So until they've amortized them, they're not going to walk away.
Oh, I agree.
But I do think it's going to be a combination. I don't think there's any one solution.
No,
but my view is, look, U.S. aviation fuel alone is a 22 billion gallon marketplace. I'll take my 20% of that, be quite happy, let you have your share. I think there's enough to go around for a lot of different solutions. I don't think any one of these in even any niche, there's a solution. But I think that, there are challenges. I mean, I had a conversation Friday with a guy creating a new aircraft that will take both yours and my ideas one up. So, so I think that, I have to be open to what's out there. And, he's creating a completely new design of an aviation, of a plane that'll fly cheaper, faster, further. So, you got to look for what's out there and figure, somebody's going to figure it out. So,
clean sheet aircraft, you're looking at minimum 10 years for certification. So
they're partway through the process. So they're probably 5 years. They're 5 years from certification, though.
Awesome. That's great. And that's fabulous. And there's a lot, and I totally agree with what you said. There's a lot of room for everybody. It's just like we were talking about SPACs. We were talking about, Brian was talking about his capital. Charles was talking about what they look for. Hey, we're all in it, and there's all different little pieces. I'm not in the UAM market. I've given that up. I'm not trying to send 70 people across the Atlantic. I'm not interested in that.
Yeah.
I'm not interested in Denver. I'm not interested in DFW, and I'm not interested in the LAX. I've already been there. I do work on a side business with that.
John and Bill, we should connect you after this. We're all located in Southern California, and I know your backgrounds before coming to Renewable are very impressive. So you two can definitely connect.
Yeah, so I appreciate it. I appreciate you inviting me in. I want to throw it up because, in my research, and I would consider myself an electric aircraft aviation expert. I know what's going on in the industry. I know who the players are. There's a lot of room. There's a lot of room for, you need to look at just propulsion systems. To Bill's point, guess what? FedEx has 287 cargo Cessna 208s. Guess what? They're going to convert them all to electric, because electric, they're just only going 80 miles. They're going 120 miles. They just fly from Louisville to Richmond and back.
John, those are good points, and absolutely, you are an expert. And that's why we brought you on here. We do have 15 minutes left. I want to make sure everybody gets to say their piece. Moving on, let's actually go to Bill. Bill, I think you have a unique perspective on this. Could you share what you're working on?
Yeah, sure. We're kind of working in mostly the vertical ag sector. But we're doing actually cannabis and vertical ag. We started looking at that market and how it ties in with a lot of the emerging needs from a food production or medicine production perspective, but also the energy load required by it. And kind of did it. I've also done some advisory work on some vertical ag companies in the past few years, so I understand the sector pretty well. And the energy consumption is pretty interesting, because if you're growing local crops, regardless of what those crops are, the energy loads are anywhere from 2 to 3 megawatts per 100 square feet upwards. They typically use a lot less water, no pesticides, so they're able to deliver crops at a much lower GHG perspective when it's done right, but a lot of times you can't generate that much energy on site. You got to think about the production in relation to like a data center. A lot of high energy usage, but when you can power it correctly, you can do it in a carbon negative manner. And what we're doing is, creating offtake agreements with RNG projects or waste management systems, trying to capture those offsets and burn them on site. In the future, we're actually looking at being able to do that from a hydrogen perspective. But a lot of the facilities that we're working with are in the greenhouse sector. And just from a food production perspective, I heard a number that 80% of all the greenhouse crops in the US are imported from out of the country. And that's because of a deficit here in the US in relation to not only the infrastructure on the greenhouse side, but from the energy side as well. So, we're working with multiple different technology partners that verify the offset of what we're doing, automate the growing process, and then be able to generate that efficiently from a production perspective. And a lot of it is older technology that we're just reutilizing in a new way or a new method. If you look at the production standards of other countries that have been doing greenhouse production, whether it's food or other crops, Netherlands is one of the biggest exporters of food in the world. They're a super small country, but they're super, super efficient at what they do. So they're able to utilize a lot of the waste, the stream that you would normally not be able to utilize from a environmental control, heat, CO2 perspective, and energy generation. The other thing that's interesting about being able to do a local microgrid for food or energy or crop production is that typically crop cycles are in 12-hour cycles. So then potentially you have an extra 12 hours of that cycle that you can feed into the local grid. And if you're doing it right, where you're capturing all the biomass, the excess biomass actually goes into regenerative agriculture programs or other projects that create a total closed loop system. So that, those are kind of some of the challenges that we're doing right now, is trying to capture that local crop production, scale it up, create the infrastructure, but then create the efficiency where you can balance the grid or sell that energy load into some of the emerging markets that are required. In my region, I'm in Monterey County. We're the ag capital of the world. We ship produce all the way across the U.S. and deliver it into the Eastern Coast markets, heads of lettuce. So they're really good at crop production, but you think about that from an environmental perspective, both from the water side, but also from the CO2 footprint side. It doesn't work. It doesn't work in this model anymore. And, we can make a crop, grow it, produce it, package it, and send it out into the local market with essentially a carbon negative footprint because we're capturing the entire stream.
Bill, how can we help you as a community?
We have a few different funders in the, funding space that look at these projects, but a lot of times, these are emerging technologies. So if it's vertical agriculture, well, we're doing crop production. They're companies that maybe have been well funded, but they don't have the balance sheets and the P&Ls behind them. From the cannabis perspective, it's not federally legal, so people don't want to take a risk. But when you think about it from an OpEx perspective, everybody always pays their utility bill. And if you can create that energy profile in a low cost as possible, they're going to pay their energy bill because it's relying upon their revenue. Now, if you can take half of that production and then also sell it out to the grid, you're de-risking that project. So we're always looking for technology partners and finance partners that are interested in this space. We have some really interesting technology partners as well that we work with in the space. We've got one guy that's got a USDA grant that he's working on direct air capture, because in crop production, you're typically utilizing excess CO2 and enriching the environment. Well, if we can do that as a byproduct of what we do, where we're capturing excess CO2 and pumping it into the biomass, then just the plant production process is carbon negative.
Wow. Bill, thanks for sharing. Anybody have any questions?
Yeah, Bill, two questions. First of all, cannabis microgrids, talk to me. Definitely a segment that Generate has a lot of interest in, and we're very comfortable with microgrid technology. But the other question I had was in vertical ag, and this is putting my project finance hat on. One of the things I've noticed financiers struggle with is, well, twofold: offtake and making sure that your products are perishable so that they actually get sold.
Yep.
And the other thing is how you hedge against price volatility.
You know, on the food production side, you know, the groups that I've talked to in the vertical ag market, the ones that are working and doing it right, go out and they'll create a low volume kind of modular approach to the market where they're starting to capture market share within the local volume. Or within the local market, and then ramp up production over time. So it's a long-term, you know, kind of relationship into the local market, whether it's tomatoes or leafy greens or what have you. I think that, you know, when you look at some of the other markets, if you look at Japan from a vertical ags perspective, they value that crop in a price point higher than organic because they consider it cleaner, and actually it is cleaner. You know, it has, I mean, we essentially use almost no outside water or no outside water in some cases, no pesticide, you know, so it's a much cleaner crop with no carbon footprint. And so over time, I think that crop value will go up. Now, if you factor in the CO2 footprint of a crop, of a locally produced crop versus a crop like in Monterey County, where you're shipping it all the way across the US, when those CO2 impacts start impacting food production, it's going to be a huge hit. And those industries don't have the ability to adjust margin.
Bill, those are really interesting. Brian, I do want to get to your question, but we have one more person I want to bring up before we get there. Yeah, I do want to introduce John White. Save the best for last. John, you're a true advocate of the environmental space, and I know what you're working on is really close to the consumers, and you partner with a lot of these technology companies. Love to hear from you. I have you muted, so you'll have to unmute, but excited to hear your take.
Thanks very much, and I've very much enjoyed hearing everyone's talk. Some of the folks I know and are working with. Our organization is a coalition of clean energy companies and environmental justice organizations. We've been around for 30 years in California mostly, but we export some of our thinking to others. We pretty much try to stay at the state and the local and the regional level. We have gone from the idea of having a renewable portfolio standard that originally started out in 2001 as 20% by 2017 to the point where we now have an adopted RPS of 60% by 2030 and a policy of net zero carbon by 2045. We also have the Los Angeles Department of Water and Power, where we've worked for many years, having an even more aggressive policy. So we're past the point where we're simply adding renewables for the sake of scale or trying to demonstrate their feasibility. We're now at the point where renewables, wind, solar, and storage are generally cheaper than new gas, much less coal. And but the challenge now is, as was alluded to earlier, the more renewables we add to the grid, the more we need to think about how they fit together. So our challenge at the moment is how do we run the grid without fossil fuels using portfolios of renewable resources, demand response, storage, so forth. At the moment, we're busily trying to persuade our backward thinking regulators at the Public Utilities Commission to recognize that natural gas is not the solution, particularly given our experience in the heat storms. We had a 22% forced outage rate and price spikes on the gas sector. We're running old, inefficient coastal gas plants for reliability because we haven't done procurement. There's a whole policy issue with how to do procurement in a decentralized load serving entities. We have a phenomenon out of here called the community choice aggregators, which are taking the responsibility for procurement from the investor-owned utilities, and that's created a degree of uncertainty. our focus, our group includes a variety of companies from ENEL from Italy to Berkshire Hathaway Energy to EDF Renewables from France. So we have a good diverse mix of companies. We are involved with utility scale as well as distributed resources. I also have a consulting practice where I'm advising companies and working on new technologies. California has a significant amount of new investment going into hydrogen fleets and infrastructure. Some of the companies that were mentioned are being part of those demonstrations. So that funding is providing resources for planning for the fleets and the infrastructure that goes with them. And that's, I think, going to be a significant part. We have a port drayage truck initiative coming, as well as funding for hydrogen infrastructure. So we have a lot going on out here. Of all the things we're working on that I think is the most interesting and exciting, it's a pretty big list, but one in particular I want to highlight is the role of geothermal brine as a source of lithium. In the Salton Sea region of California, we have a significant geothermal resource that's not been expanded recently, but which has been around for 20 years. And we now have an initiative that has been launched to basically extract lithium from geothermal brine and provide a significant opportunity for global competition compared to the other traditional sources of lithium. Bloomberg New Energy Finance has looked at this and concluded that this is an economic source of lithium. The key step is to demonstrate commercial scale on the extraction technology. Berkshire Hathaway is working on that with a DOE grant and California Energy Commission grant. So we have a lot of things we're working on, a lot of it in the policy arena, and we are advocates, but we are trying to also be source of understanding and inspiration for how we can actually do the things we're talking about. It was mentioned that California is trying to expand electrification and that's going to pose challenges to the grid. What that tells us is that the electric grid is going to grow. And that's going to make all of this more affordable because we have a larger base on which to spread. But it means we have to do a better job of planning and fitting together these different pieces. We need a balanced portfolio on renewables and a balanced portfolio on storage and a lot of work on load flexibility and demand response.
John, thank you for sharing, and kind of that was a great tie into kind of sum up everything we've talked about. You've got a lot of initiatives and a lot of technologies, and it's about putting it all together in a way that makes sense for our communities. That's really interesting, that the lithium from that piece. Wow, I learned a lot from this mastermind actually, and I hope everybody did. Brian, I know you had a question, but we can take that offline. I know everybody's busy here. I do want to wrap it up, but great discussion across the board. Like, thank you for joining. And Bill, you had a great, you had some working on a technology for an airplane that could be even better than what we're looking at. Please introduce. We'd love to bring him back to our next mastermind. So to all the speakers, thank you. We have another renewable energy mastermind coming in about a month's time. We'd love to bring you back. Thank you for joining. To all the attendees, thank you for joining and listening to the thought leaders on the stage share their insights from the industry. And this is what we do here at Crowdcreate. We connect projects to founders to thought leaders, and just we speed up the dissemination of knowledge because we believe in the wisdom of crowds. By putting you guys at the front of the stage and chatting and just debating, we can actually learn a lot from you. So thank you for your time, and looking forward to the next mastermind. On these Crowdcreate masterminds, we bring these thought leaders to the front of the room to share their insights with you. We believe in the wisdom of the crowds. Every week, we come to you with a new episode to share these insights to help you get ahead.